Hey guys, welcome to episode 13 of US Stock Market Technical Analysis. In this video, I'll be sharing my technical insights of the US stock market, namely the S&P 500, Dow Jones, and the Nasdaq. And for all of you guys which this is the first time you're watching my technical analysis video, in this video, I'll be going through the S&P 500 first, followed by the Dow Jones, and then the Nasdaq. Alright, let's minimize this step and begin. This is the daily chart for the S&P 500, and if we take a look over here the S&P 500 was consolidating for a while. We had a false breakout over here, and then prices fall back down within the range, and then now prices are above the range again, and prices are still holding up above the old resistance level and the new support level. So you can see over here prices gap up here, and then prices managed to find support at this old resistance, and over here at this candlestick, even though we had a relatively large bearish candlestick, prices managed to still hold above the support level. Right, so if we take a look at these two candlesticks over here, this small bullish candlestick and this relatively larger bearish candlestick, we see a bearish engulfing pattern forming. And a bearish engulfing pattern forms when the body of the bearish candlestick, in this case this candlestick over here, is larger than the body of the bullish candlestick over here. And that is why we call the pattern a bearish engulfing pattern, because the bearish candlestick engulfs the bullish candlestick. So a bearish engulfing pattern indicates to us a possible bearish reversal. And this is a bearish sign for us. While the bearish engulfing pattern itself is a bearish sign for us as traders in the stock market, perhaps for us one of the silver linings for this bearish engulfing pattern is that the bearish candlestick still manages to close above the support level. The bearish engulfing pattern would have been more bearish if the bearish candlestick closes below the support level. And if we look back a bit over here, we also see a bearish engulfing pattern because the body of the bearish candlestick engulfs the body of the bullish candlestick. And when a bearish engulfing pattern appears after a relatively extended rally, this signals to us a possible bearish reversal ahead. And as we can see on the next day, prices fell a bit. So another bullish case for this bearish engulfing pattern is that preceding this bearish engulfing pattern, the rally wasn't very extended. And this tells us that the bearish case for this bearish engulfing pattern is not as strong as if this bearish engulfing pattern appears after an extended rally. Now let's take a look at the hourly time frame to have a greater picture of what's going on. Let me zoom out a bit. Over here we see prices gap up from here to over here, above the resistance level. And after prices broke above the resistance level, the old resistance level became a new support level. And you can see over here prices rallied a bit before it declined and still managed to find support at this new support level. Having seen the bearish engulfing pattern form on the S&P 500 daily time frame, there's a possibility that prices decline in the coming days. So the first support that I'm taking a look at is this support level over here. And if prices do manage to break below this support level, then the next support level that I'll be taking a look at is over at this area over here. With that said, there's also some bullish arguments against the bearish case for the bearish engulfing pattern. Namely that the bearish candlestick in the bearish engulfing pattern is still managing to hold up against the support level, and that there wasn't an extended rally before this bearish engulfing pattern appeared. In this case, the bearish engulfing pattern might indicate to us a temporary profit taking by traders in the stock market. But the bullish momentum still remains with the S&P 500. So if prices for the S&P 500 move to the upside, I want to see prices breaking above this level of around 372.30. Because as you can see over at this price level, there's a bit of resistance over at this left side over here. So if prices break to the upside, I want to see prices breaking above that level, then find support, and then continuing to move upwards. That's my technical analysis for the S&P 500. The next one that we'll be taking a look at is the Dow Jones. And we'll go on to the daily time frame, and let's minimize this tab. On the daily time frame for the Dow Jones, there was a bit of sideways movement over here, where prices traded in this range between this upper head resistance and this below support level. And we see that in the recent days, prices gap up from this candlestick over here to this candlestick over here, and managing to find support at the old resistance level. Prices managing to hold up and finding support at the old resistance level is a bullish sign for us as investors and traders in the stock market. What we do not want to see is prices breaking above the resistance level and then immediately falling back into the range. And that is what we call a false breakout. So in this case, so far we have not seen a false breakout after prices breaking above the resistance level. With that said, we also see some price rejections when prices break above the resistance level. So for this bullish candlestick over here, there was some price rejection as indicated by the upper wick. And for this bearish candlestick, we also see some price rejection as indicated by its upper wick. This tells us that even in midst of the bullish momentum, there are still some sellers in the market. If we move on to the hourly time frame, we get a clearer picture of what's going on the different levels of support and resistance. So over here you can see that prices were trading within this range. So when prices reached the top part of the range, it encountered resistance, it fall back down, and when prices reached the bottom of the range, it found support and bounced back up. And this was repeated quite a number of times over here, before most recently prices managed to finally break above the resistance level and then managing to find support at the old resistance. We see for this bullish candlestick and this bearish candlestick, there was quite a bit of price rejection at those two individual candlesticks. And as mentioned earlier, this shows us that there's still some sellers in the market. For the coming days, for the Dow Jones to maintain its bullish momentum, I want to see the Dow Jones breaking above this price level of 303.88. Because at this price level, you can see towards the left, there was a bit of support at this level, but after that, prices broke below that level, and right now prices are below that support level. So what this tells us is that old support level can potentially become a new resistance level. And that is why moving forward, for the Dow Jones to maintain its bullish momentum, I want to see prices breaking above that level, then finding support, and then continuing to the upside. But if the bullish momentum for the Dow Jones and the support level do not hold, then we could see prices breaking below this support level, and then the next support level that I'll be taking a look at is this support level over here. That's my technical analysis for the Dow Jones. Now let's take a look at the Nasdaq. So we'll go on to the daily time frame and we'll minimize the tab over here. Let's zoom in a bit. For the months of November to December, we see prices in a very nice uptrend. We have a rally over here, then a bit of a retracement, rally over here, then a bit of sideways movement, rally over here, some retracement, rally over here, some retracement, and now another rally. And in the past two trading sessions, prices managed to break above this level over here. And not only did prices manage to break above this level, prices also managed to hold above this level. So whenever there's a significant area of interest, not only do we want to see prices breaking above that level, we also want to see prices holding up above that level. And so far, prices managed to hold above that level. Let's go on to the hourly time frame to see what's going on. We'll zoom out a bit. Over here, prices rallied a bit, and then it found some resistance at this level over here, and then it fell back down. It rallied again, found some resistance, and it moved sideways for a while as investors and traders ponder their next move. And as the bulls and bears battle over this period of time, after a while they managed to reach a conclusion. And the bulls won, as we can see that there was a gap up in prices, and prices also managed to break above the resistance level in the process. And after that, prices rallied for a while, and right now prices are moving a bit sideways. There's a bullish case to be made for the Nasdaq right now on the hourly time frame. Over at the right side of the chart, for this candlestick over here, this candlestick over here, and this candlestick over here, whenever prices reached the new support level and old resistance level, there was clear price rejection at that price level. So if we take a look at this bullish candlestick, when prices reach close to the support level, take a look at what happened to prices. Buyers start to step in and push prices to close at this level over here. Similarly, for this candlestick over here, prices open at this level, then prices will push all the way down to the support level. And then after that, buyers start to step in and push prices to close at this level. For this candlestick over here, when prices were pushed down to this level, the buyers start to step in and push prices up. So what this tells us is that at this support level, there are quite a number of buyers waiting to buy up shares. While that is not enough to push prices to the upside just yet, the fact that there are willing buyers at the support level indicates bullish momentum for the Nasdaq moving forward. So moving forward, I believe that the line of least resistance for the Nasdaq is upwards, so moving upwards. But at the same time, we cannot discount the fact that there are still some bears in the market. So if the bears manage to wrest control from the bulls, then the support level that I'll be taking a look at is this support level over here. And if prices do manage to break below this support level, then the next support level that I'll be taking a look at is over here. That is my technical analysis for the Nasdaq, and this wraps up my US stock market technical analysis video. Have a great new year, and if you have liked and learned something from this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you haven't already subscribed to this channel, make sure you subscribe to this channel because each week I release one new video about investing, trading and the stock market. I'll see you in those other videos to your financial success.